As the federal banks and governments of the world want to regulate blockchain technology for the purposes of anti-money laundering and knowing your customer, even the Federal Reserve is recognizing that the more relaxed we make the strong cryptography for the purposes of authorities to monitor illegal activity, the weaker we make the blockchain for everyone, including the banks and the politicians and the authorities. Let's discuss. Hey everybody, I'm Gary Palmer Jr., you're you, and together we're minting coins. Thanks for showing up and being a part of today's video. I am really excited about going over today's information. Now, everyone is hearing about Bitcoin at some point or another, and there's so much confusion. There's so much that people don't know, and there's a lot of misinformation that's being spread out there. On top of this misinformation that's being sent out there, there's a lot of confusion in our society so that people think that actually using or owning Bitcoin itself is illegal. This might be confusing on purpose or directly or indirectly, but the fact remains is that there's a lot of uncertainty about what Bitcoin is and why we can use it or why we would even want to use it. And in the information that we're going to go over today, I'm going to show you the exact discrepancy, the exact conflict, the reason why Bitcoin doesn't make sense to anyone in politics or the world of finance, and why this is good for you, why this helps you, and why your world is a stronger, more secure place with Bitcoin in your life. So with that, let's look at the news and let's discuss. Hello everybody. So looking at the news that I wanted to go over today from earlier last month, there's this article from the Cointelegraph how someone from the U.S. Fed governor was talking about how digital currency could make it easier to hide illegal activity. But that's not the focus of this article. The title of this article is a little deceiving, and we're going to go over this here. So the U.S. Federal Reserve has again warned of the risks associated with digital currencies, this time focusing on the security trade-offs for central banks. And so again, this is a governor of the central bank, Governor Jerome Powell, and he was talking at a speech at Yale Law School how banks may start to find themselves in this catch-22 situation. And this is what I want everyone to understand. Right here in this part in green, if you can see the screen, where he says that to the extent that we relax the strong cryptography to make it easier for authorities to monitor illegal activity, we could simultaneously be weakening the system. So he's letting people know in this speech at Yale Law School that while we could make blockchain able to monitor everyone's information and everyone's transaction and all this specific information just like the banks are doing today, the more control that we put over the system and the more centralized we make the system and the more relaxed that we make the cryptography to allow eavesdropping and to allow authorities to have access to all this information that they would want to monitor, that in itself is inherently, simultaneously, directly weakening the security of the system. And that's essentially is how blockchain technology works. The more security blockchain has and the more distributed equally that the blockchain is amongst all the parties in the system, the more secure and the most secure that system can be. So he goes on to say how we should open up new ideas and innovations to drive economic growth and improve the financial system. And at the same time, he's recognizing his audience at the Yale Law School that authorities will do whatever it takes to keep their money safe. And so that's a threat, or that's a warning, that's That's information to let people know that authorities will do whatever it takes to keep their money safe. I assume it's the money of the people, the money of the economy, the money of the financial systems. But at the same time, he's encouraging growth, encouraging innovation, and essentially encouraging integration of the blockchain technology with the system. In jumping over to this other article from a report released from Moody's credit rating agency over at Coindesk.com, Moody's is letting us know not to expect the U.S. to lead this blockchain adoption. So Moody's is predicting that the blockchain technology is going to spark this transformation that everyone is talking about, that everyone is warning everyone else about. What I'm letting you know about is that the same prediction is that blockchain technology is sparking, we're in the process of this transformation being sparked across all businesses. Specifically, they're saying the securities businesses. And they're also arguing that more developed markets like the United States may not play a prominent role, at least not in the short term. So while they're recognizing that there's huge space, ample space for blockchain technology and companies to thrive, the barriers to entry are huge. The barriers of entry that come from regulation, that come from the sheer size of the existing incumbents in the financial system of the United States. It's very difficult for these startups to be strong, to operate at a profit, to really function efficiently inside the existing system because of the difficulties imposed by the regulation and how large the existing players are. And so because of that, Moody's is saying that they don't see blockchain becoming huge in the short term inside places like the United States or the European Union. And so this next quote from the report's lead author, Robert Williams, just blows my mind. And so Mr. Williams says, we really don't necessarily see today's incumbents being displaced or disrupted in the first instance. To some degree, those seem like some famous last words. If you don't see the possible displacement or disruption of an industry, then that industry, I think, could definitely be displaced or disrupted. When we're taking in information from the world and about a subject or a topic, there's a lot of information that we do know. I think it's important for us to recognize that there's a lot of information that we don't know. And I know it's kind of strange to think about the unknown unknowns, but by first recognizing that there's information that we don't have, then we can open up our imaginations to the possibility of what could potentially exist. The Moody's report goes on to talk about the uncertainty of whether the blockchain solutions can manage high volume, high speed transactions, which are critical for blockchain and cryptocurrency to survive, since so many transactions happen so quickly across the world on different payment networks like Visa and Western Union, that Moody's isn't sure that the blockchain solutions can manage the same level of high volume, high speed transaction flows. And so the report goes on to outline 3 possible scenarios where blockchain technology could come in to our society in places such as the United States and the European Union. And so those 3 range from the current financial institutions taking charge and leading the way to B, a hostile takeover of the industry, or C, total disruption. And then they point out a middle ground scenario that's posed, which a single incumbent pushes the needle in conjunction with startups. That would look like the Federal Reserve pushing the needle with a startup to work with the startups to integrate blockchain technology across, say, the United States. Or, for example, if like one national bank teamed up with a cryptocurrency or their own cryptocurrency to facilitate the distribution of that cryptocurrency to all the people in America, then that That would be the middle ground scenario. But the report deems this highly unlikely. I think it's important for us to recognize that all of these scenarios have some amount of likelihood or unlikelihood. It's not likely that there's going to be mass Bitcoin adoption within the United States this year. At the same time, anything is possible. But looking at the facts and looking at the news and looking at what we do know, the scenario that's most likely to develop is the scenario where Bitcoin is really adopted in the developed markets, such as Australia and Brazil and Canada and Hong Kong and Japan, Korea and Singapore, where there are fewer intermediaries involved in the processes. So fewer intermediaries in the process is going to help facilitate the creation of these new flows, these new pathways of the blockchain financial systems, of the distributed ledger technology for anyone to send or receive value to anybody else in the world. And right now that's possible for anybody in the world. Anybody that has access to an internet connection, even if they store their value on a piece of paper that they can later redeem or sell or cash in. But for the markets where there are many more intermediaries, such as the European Union and United Kingdom and the United States, more collaboration among the existing firms or regulatory bodies would be required for the integration of Bitcoin or blockchain technology with the existing financial systems. But with that being said, it's critical for you to understand that you do not need that to happen now or today or ever for you to be involved, for you to have ownership, for you to have your stake in blockchain or different blockchain protocols like Bitcoin and like Ethereum. So to have this mass adoption at a national level, to integrate Bitcoin and blockchain technologies with the existing financial institutions and securities companies and corporations that we're all familiar with on a local and national level, we would need some sort of mass adoption of Bitcoin and integration of those systems with the existing institutions and laws of our financial systems. But that's not going to happen likely anytime soon. As the report mentions, Bitcoin could be adopted and accepted by the existing institutions, not likely. It can work with a single incumbent and the startups to push the blockchain technology forward, not likely. The startup companies can get past all their regulation and thrive inside the existing market, not likely. All of these scenarios are not very likely, and it's also to some extent not even relevant. We don't need regulation and laws and rules in place to tell us how to use Bitcoin, because Bitcoin is legal. Bitcoin is accepted everywhere. Anyone can get Bitcoin and use Bitcoin, and we don't ultimately need this regulation for someone to tell us how and why and where we can use blockchain technology. The whole point of the technology is for you to be unbanked, for you to be your own bank, for you to store hold your own value, your own wealth, your own resources, your own assets, without keeping those in someone else's vault for them to spend against and for them to risk inside, all of their crazy complex financial instruments and all of their crazy securities. You look at what happened in 2008 with the Great Recession, and you look at the housing bubble and a lot of the ways that money is being managed right now. And conclusions that we come to is maybe we don't want the blockchain managed the same way that our US dollars have been managed. Maybe we don't want a total integration with the blockchain technology and the existing systems that are loaded with fees, that are loaded with inefficiencies, that are loaded with redundancies that are just slowing these systems down and are holding us back. And they're trying to figure this out. There are the AML, anti-money laundering laws, and there are the KYC, the Know Your Customer laws, and the authorities want to understand everyone who's sending or receiving any transaction in any amount, anywhere, for any reason. And inherently, by them creating the processes to monitor these systems, and by them relaxing the security for the authorities to get the access that the authorities want, they would inherently be making this whole system more insecure. And maybe that's a trade-off that they want to make, but maybe it's not, because if the main system fails, if the primary system fails, hypothetically of the fiat currency, then the officials themselves will need a way out. The officials themselves, the bankers themselves, the governments themselves will want to know that the Bitcoin or the blockchain technology and protocol is secure even for them. Because if they weaken the system for some people, they weaken the system for all people, and we're all connected and we're all sharing the same space, then weakening the security for all people includes themselves as well. And I'm happy to be part of a distributed, secure system where we are each equal playing members on this field. And thanks for joining me on this field. And with that, thanks for joining me on this video. Thanks for showing up. Hit that like button if this video helped or inspired you. Be sure to subscribe so you find out when I send out the next video. I have more information coming out for you. I have more tips in the way, and I want to share that information with you. I want to know, what do you think? What do you think about the United States leading the Bitcoin for the world? What do you think about the United States leading Bitcoin for the United States? And what do you think about the Bitcoin staying distributed, about blockchain staying distributed for the distributed technology to stay more secure? So share your thoughts below, let me know what you think, and I'm glad together we're minting coins.